take a look at emerging markets. All right, some have used this as leading indicator that if emerging markets refuse to do lower lows, then the SPX will soon follow. Let's check it out. I'm going to start by just doing the monthly candle chart. Where's my support? Monthly defined support, monthly defined resistance, 12-month moving average declining. So that's still in the stage 4. And my breakdown, I think about here. This candle right here, starting to roll over 12-month moving average, pull back up, down, 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 gap down, close strong, and right now hitting that declining 12-month moving average. So for EEM, in the higher trend, still in the stage 4, starting to define a bigger pattern. Let's go look right now before we start comparing it. Awesome stage 2 on the weekly, Stan Weinstein style. Stage 3 right here, as soon as you had to close below that 30-week moving average, you're starting to slow it down. Danger zone, don't pray that it goes back up. You just have to wait for the signal to go. You didn't get it, broke down, hit that Ichimoku cloud defined support. Look at it, sucking it back up, hitting that monthly defined support now turn resistance. And while all that is happening, you're below the 30-week moving average, the declining 30-week moving average. And that's just an awesome stage 4. Just like you had a great stage 2 right here, above, always pulling up that 30-week average, always pulling up the Ichimoku cloud. Then it's the inverse. And you see we're starting to create that Ichimoku cloud defined resistance. We're pulling down, we're below that declining 30-week moving average. Paste arrow. So what do I see here, guys? Classic telltale signs of issues. Red, huge red candles, huge red days, far away from the 30-week average. Down 5.8%, down 5.3% on huge red volume. Something's up, something's wrong. Another one right here. But after that, we had that crazy rally. 1, 2, 3, 4, 5, 6. 6 weeks ongoing. And we could already see it here in the Mansfield Rental Strength. That's an awesome indicator from a stand. Compare it to the index you're in, or compare it to an asset that's in your same sector, same industry. You get that relative strength versus any other instrument you want. But we're going to compare it to the SPX because you always want to be outperforming the SPX. You don't want to go long a stock that's not outperforming the SPX because you just might as well buy the SPX. And same thing for short. And right here, we've severely underperforming the SPX while it was probably holding strong back here in August until it started falling in October. But after that, we started slowing down. As the SPX was going down, we started slowing down, catching up, less and less underperforming the SPX. But right now, we're starting to re-accelerate our decline underperforming the SPX. So the SPX has actually kept going up, but if we are any leading indication, right now we are showing that there's some resistance. The price action has difficulty. Now it closed here previous week with sellers coming in. You have that wick, and the next week after that wasn't able to get a green candle. Some indecision right here, a little buyers and sellers above and below, but we're not climbing as high as SPX has been doing in the past 2 weeks. We're going to compare. I'm going to pop up the chart. I'm going to pop up the SPX right after. Here, we're back. We can't short EEM anymore. You're back above the 30-week moving average. You're back into a stage 1. So even as we saw on the monthly that we're still in a stage 4 decline, that price action of us getting back close to that 12-month moving average, but still below. Well, that was strong enough to flatten out that 30-week moving average for us to have closes above. So on the smaller time frame, this has already turned. The monthly still there as the big brother who could bring this back into alignment and say, hey, I know you had fun above that 30-week moving average. I know that you're in a stage, you want to go into stage 2, but look, you're still in a stage 1. You're still below monthly defined support, turn resistance. You're still below Ichimoku cloud. At any moment, I could decide to hit my hammer, and it won't be exactly like that. I could start bringing you back down, guys. And it could go back down, test here. So is this a false breakout above 30 average? Is it going to stay here? Is the 12-month average going to bring it back down? Are we going to start hitting the weight of evidence, other elements? It could happen. But right now, this is not a stage 2. Remember, you needed green. The minimum green, you want to be outperforming the SPX. You want to be above an inclining 30 average. And right now, the only thing we have is it's still declining. We just have one of those 3 criterias. We have the price action above. So we don't short on the weekly. Wait for this to turn back below that 30-week moving average. You're starting to reaccelerate your underperforming the SPX, and combine that with the monthly candle chart, and this could be start going back down and testing those lower levels there. All right, so that's EEM, guys. Monthly down, Stan Weinstein style, stage 1. So, and that's the catch-22, guys, with wanting to time the bottoms or the turnarounds. So every time frame is going to start, the smaller time frame, they're going to start showing signs of turning around, like a speedboat, a small boat. They could turn fast, trying to change direction. But the higher trends, like the big cruiser, can't change fast, but it creates a huge wake, huge waves. So they all have to start aligning together. On the daily, this is probably in the stage 2 almost. Weekly starting to turn around, but as long as the monthly hasn't turned around, this is a potential whipsaw, and that's why you don't properly see it as a stage 2 breakout. You're still seeing it as stage 1. You still have a lot of elements, bearish elements that were created because of that downtrend that you haven't overcame yet. So very, very dangerous to decide to go long here. You're stuck middle of no man's land, and the hammer could be hit at any moment, guys. Okay, let's check it out with the SPX. How much of a leading indicator was that? Get me my candles. Close that. Remove the volume. Okay. EM. Ooh. And the SPX is on a tear. Look at that. Kept going up while we started slowing down on EEM. This is very hard weekly defined resistance. We could have a price action go above, but remember, we got to wait for the end of the week to close below. Really make sure that you don't get whipsawed. So next week and maybe the week after, combining that with the February close, a lot of critical action right here. Is the SPX going to go up and then create that right shoulder on the weekly chart and then go back down? We'll know in the next few weeks, guys. But if EEM is any indication that it started rolling over, did it do it before in the past? Did it here? Somewhat higher lows, lower lows on the SPX, bullish divergence, getting consumed, bring that price action back up. So if there was some indication there, higher highs, SPX, and lower highs. Hey, lower highs on the. Sorry about that. lower highs on the EEM. Huge bearish divergence getting consumed right here. So yeah, leading indication used as an indicator. EEM has in the close, not always, but in the closest period to where we are now, it has shown some indication of being leading indication for the SPX, guys. So got to check this out. EM, if it keeps going down, SPX could follow suit. Anything's up for grabs right now. Everything's borderline. So a lot of U.S. markets, I post on StockTwits and Twitter, a lot of are going back in the stage 3 on the monthly chart, especially if the February candles could stay above those 12-month moving average. But emerging markets, guys, they're still in a downtrend on the monthly, giving signs of turning over, maybe going back into stage 2 eventually if it goes up here on the weekly. But that's what's going to happen when you have a strong move. You start wearing down on those bearish technicals. But you have to wait again for the weight of evidence. Make sure you don't get trapped. Make sure that they're all aligned, just like they were at the beginning in 2012 when everything started blowing up. Or in 2007-8 when those tops were really getting formed and everything was breaking down at the same time. You gotta wait. For me, patience is required. 2 more weeks. Let's see how February closes, guys. All right. Thanks for watching.